This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Odd couple? Microsoft to buy LinkedIn, its biggest purchase ever, but will the deal provide the growth Microsoft wants?
Stocks rattled while a looming vote across the Atlantic makes some investors very nervous.
One simple click, that's all it takes for a hacker to get into your smartphone. We'll tell you the simple ways you can protect yourself. All that and more tonight on Nightly Business Report for Monday, June 13th.
Good evening, everyone, and welcome. A blockbuster technology deal. Microsoft is buying LinkedIn for more than $26 billion, making it one of the largest tech acquisitions on record. But at first glance, that tie-up may seem a little odd. A stalwart of software wanting to buy a social media network for professionals. But experts say the combination of Microsoft's Office 365 and the world's largest professional social network may in fact help create a new workplace for the modern age. The purchase sent shares of LinkedIn soaring 46%. Microsoft fell more than 2.5%, making it the worst performing stock on the Dow. The big question now is whether the purchase of LinkedIn will provide Microsoft with the growth it's been searching for. John Fort has our story.
It's the biggest purchase Microsoft has ever made and the boldest move by CEO Satya Nadella. What does Microsoft see in LinkedIn that inspired it to pay about 7 times what the Silicon Valley network is expected to make in 2016 sales?
Reed, Jeff, and I have known each other for a while, and we've been talking about these things together for a while. But to me, this is about the next phase of growth for Microsoft. Of course, we can do things commercially in terms of integrations. But when I think about the opportunity ahead around productivity, business process, and the professional network, it's a tremendous opportunity to expand our ability to grow.
If Microsoft can get users of Microsoft Office to spend more time on LinkedIn and can get more LinkedIn users to subscribe to Microsoft Office in the cloud, it should boost the software giant's sales and make its cloud services smarter. So far, the investing community seems willing to give this big bet a shot.
I think it's smart. I think it's the first big thing that Satya has done at Microsoft. Makes a big play in both cloud and social, which they really didn't have a play in social.
The cloud factor is especially important this year with all the major tech titans, including Google, Amazon, Facebook, and Apple, spending money and time on artificially intelligent services. The goal is to build software clever enough to understand spoken requests and make helpful suggestions even before you know what you want. When has Microsoft ever tried to buy something this big? Well, just once. 8 years ago, it bid more than $44 billion for Yahoo, a company investors are now happy Microsoft didn't end up buying. The question is whether 8 years from now, Microsoft investors will be happy they connected with LinkedIn. For Nightly Business Report, I'm John Fort.
Following that deal announcement, Moody's warned that Microsoft could lose its top-notch AAA credit rating. The ratings agency, is concerned about Microsoft's plans to fund the deal through new debt. Separately, Standard & Poor's reaffirmed Microsoft's AAA credit rating.
Rodney Nelson joins us now to talk more about this big Microsoft LinkedIn deal and what it means for the future of the two companies. He's enterprise software analyst at Morningstar. Rodney, welcome. You like or have liked Microsoft quite a bit. Do you like it more today given this acquisition?
Well, good evening, guys. And I would say that we're about the same on Microsoft as we were coming into this deal. So heading into trading today, we had a fair value estimate of $61 per share on the name. The deal, as it stands today, is about neutral in our view. There's obviously a lot of opportunities that Microsoft can leverage from the data that LinkedIn provides in terms of a social network that's geared towards working professionals. There's a lot of synergies that Microsoft can create there. But in terms of where we stand on the stock today, our outlook is mostly neutral when you incorporate the LinkedIn acquisition.
Moody's put them on watch for a possible downgrade because of the issuance of new debt. Others point out the fact that, yes, they are going to be issuing a lot of new debt, but they're doing it at record low rates. How do you feel about that?
Right. So obviously, Microsoft holds a AAA credit rating for most major credit agencies. The cash flow of this business is as robust as ever. Obviously, they have some legacy businesses that are in decline, and that may be part of the reason why the credit rating agencies have placed Microsoft shares under review in terms of a credit rating standpoint. But we think that the decline in some of those legacy businesses is going to be extremely gradual, and the cash flow profile of this business is going to remain exceptionally robust. And looking longer term, when you think about some of the cloud-based initiatives that this company has taken on over the last several years, when you think about Azure, Office 365, and Dynamics CRM, we think the cash flow profile of Microsoft is going to remain exceptionally strong over the next several years.
You know, LinkedIn got a premium price today compared with where the stock had been selling, but the price Microsoft paid, about $196 a share or thereabouts, is way below what LinkedIn was trading for 6-8 months ago. The stock, along with a lot of the social media stocks, if you call this social media, has gone down. I wonder what you see Microsoft seeing in LinkedIn, given the fact that it will add revenue, it has a growing user base, but profits aren't that huge for a company as big as Microsoft. It's going to move the needle there.
Right. So I think one of the things that we really need to focus on is the opportunity that the data sets that LinkedIn is providing to Microsoft. So obviously, there's about a 430 million user base in LinkedIn as a standalone entity today. That user base is incredibly valuable when you think about the data that can be leveraged in some of Microsoft's existing applications. So when you think about the use cases that could be applied to, say, Office 365, incorporating some of the contact information that exists in your LinkedIn network could theoretically bolster your ability to generate warm leads for sales efficacy. Those warm leads are extremely valuable in terms of shortening closing durations when you're an enterprise salesperson. So if I'm trying to sell you a piece of software, for example, I can utilize the data that LinkedIn provides to maybe get a feel for where my contact went to school. I can slip in maybe a brief tidbit about how one of their sports teams did, and I can generate some warm leads that way instead of making a cold call.
It's really the value of the data more than the value of the profit stream. Rodney Nelson, thanks very much. Rodney is with Morningstar.
Well, if you don't own individual shares of Microsoft, you likely own them in one of your mutual funds. According to Morningstar, the top 3 fund holders of Microsoft are the Vanguard Total Stock Market Index, the Vanguard 500 Index, and the Vanguard Institutional Index.
On Wall Street, stocks dropped today following the lead of markets over in Europe and Asia. Government bond yields fell as investors grew concerned about global growth and the effectiveness of central bank policies around the world. The Dow Jones Industrial Average off 132. It finished at 17,732. NASDAQ down 46. S&P 500 fell 17. Another cause for concern is the upcoming UK vote on whether to remain in the European Union, and a new poll out today added to the anxiety there. Bob Pisani has more now from the New York Stock Exchange.
The markets are starting to get a case of nerves over the prospect that the UK may leave the European Union. A new poll this morning from the British paper The Guardian and ICM showed that support for leaving the EU is strengthening, with phone and online surveys reporting a 6-point lead in favor of exit, or Brexit as it's called. That came out close to the European close at 11:30 a.m. Eastern Time this morning, and European markets, already down more than 1%, dropped to the lows of the day. Now, our markets weakened a bit as well on that news. Why all this anxiety? The market has convinced itself that a UK exit would be negative for the British pound and negative for UK banks, which may be less influential in continental affairs in the event of a Brexit. But it's more than that. There's also a feeling that a Brexit would be negative for the euro, that it would be negative for European equities, and in fact, it would be negative for the whole European unity project that came out of the ashes of World War II. In that sense, this Brexit thing has become a referendum on the future of Europe. The markets think that hanging together is good. Hanging separately is not good. This is creating a bid for relatively safe government bonds, even when they have a near zero yield, as they do over in Europe. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So let's turn to our next guest for more context on what's bothering the stock market and what it'll mean for your investment. Scott Clemens joins us, Chief Investment Strategist at Brown Brothers Harriman Private Bank. Good to see you, Scott. Welcome back.
Good evening, Sue. Nice to be with you.
Let's start with the quote-unquote Brexit. The vote is coming up next week, of course. How concerned are you about that vote and its ability to create volatility?
Well, it's a concern for all the reasons that Bob laid out. It does call into question not just Britain's commitment to the European Union, but the stability of the entire European Union project. The threat that I think it poses to global financial markets is certainly one of sentiment and disruption. But the trouble with the markets today, in my opinion, is the trouble within the markets today. Namely, without any real firm direction from corporate earnings growth, of which there is precious little, or more supportive valuations, the market's primed to overreact to any external stimulus. This week it's the Fed, next week's it's Brexit. There are a couple of political conventions in July. The calendar is full of potential disruptions this whole summer.
So basically, market tippy-toeing on eggshells here because the profits aren't there to give it the foundation that you'd like to see. Fed meeting later this week. I know you are in the camp that they won't do anything in June, but might well in July.
I think the Fed still very much wants to continue along the very slow path towards restoring more normal monetary policy. The May jobs report is likely to stay their hand this week. And I think a week ahead of the UK referendum on the European Union, they don't want to be more disruptive either. Now, Fed watchers will parse the reports and will parse the Fed statement coming out this week for indications as to the Fed's thinking about the timing of it. I still think July is very much on the table. If not July, September. The timing really isn't as important as the Fed's intent to continue raising rates, albeit at a very gradual pace without any real pressure from inflation yet.
You're watching wage growth. I see from my notes that you think it's one of the single most important economic indicator between now and the end of the year. Why?
Two reasons. One, it's an indicator of potential inflation, wage-driven inflation that might accelerate the Fed's course of higher interest rates. That's the negative part. The positive part is it might be wage gains that loosen up a little bit of more money out of consumers' pockets and provide a much-needed shot in the arm both to the economy and to corporate earnings as well. This could be a good development. Stay tuned to that development.
All right, Scott, thank you so much. Scott Clemens with Brown Brothers Harriman.
Thank you, Sue. Thank you, Tyler.
You bet. Now to the story that has reignited the discussion in America about guns and our preparedness in the war on terror. The attack in Orlando, the deadliest mass shooting in U.S. history. Today, Disney, which operates a total of 4 theme parks and 27 resort hotels in that city, said it was ramping up its security measures after 49 people were killed over the weekend at a gay nightclub in Orlando by an American-born man who pledged allegiance to ISIS. Eamon Javers has our report.
When you talk about Orlando, Florida, you've got to talk about the big hometown company here, and that's Disney. Disney putting out a statement late in the day responding to news reports that the shooter at the Pulse nightclub, Omar Mateen, may have gone to Disney World here in Orlando, Florida to scout it as a possible site for an additional attack or instead of the Pulse nightclub attack. Disney putting out this statement late in the day saying, during this time, we have increased our security measures across our properties, adding such visible safeguards as magnetometers, additional canine units, and law enforcement officers on site, as well as less visible systems that employ state-of-the-art security technologies. We also heard today from the FBI Director, James Comey, who described 3 different phone calls to 911 that Mateen made as the shooting was unfolding. 2 calls that he made to 911 and an additional call the 911 operator made to him in a desperate attempt to communicate as all of this was going on. Here's what the FBI director said about those calls earlier today.
During the calls, he said he was doing this for the leader of ISIL, who he named and pledged loyalty to. But he also appeared to claim solidarity with the perpetrators of the Boston Marathon bombing and solidarity with a Florida man who died as a suicide bomber in Syria for Al-Nusra Front, a group in conflict with the so-called Islamic State.
Meanwhile, we're learning some additional details about Mateen's communications devices. We're told he didn't have an Apple iPhone. You remember the iPhone security became such a big issue after the San Bernardino shooting in California earlier in the year. That apparently won't be an issue in this case. Also, we're learning that his phones have been sent to Quantico, Virginia for analysis at an FBI lab. And one grim postscript to that, the phones had to be cleared of blood from the attack before they could be sent to the lab. For Nightly Business Report, I'm Eamon Javers in Orlando, Florida.
One day after the Orlando murders, shares of gun makers rose. Smith & Wesson gained more than 6.5%. Sturm Ruger rose more than 8%. Investors bought the shares on the theory that sales will rise in anticipation of tougher gun laws. That same pattern occurred after previous mass shootings.
Still ahead, you are just one click away from a hacker gaining access to your smartphone. But there are things you can do to protect your device and your information.
The Organization of Petroleum Exporting Countries says the world oil market will be more balanced in the second half of the year. In its monthly report, OPEC says the outages in Nigeria and the disruption out of Canada from that fire tightened the oil market and brought supply and demand more closely into alignment. Today, domestic crude prices edged a bit lower to just under $49 a barrel.
In Washington, the Supreme Court ruled against Puerto Rico in its attempt to restructure its crushing debt load. But the 5-2 majority decision deals a blow to the Puerto Rican government, and it supports the arguments made by major bondholders, agencies, and utilities. The ruling comes a few days after the House passed a rescue bill that would give Puerto Rico restructuring authority and create an oversight board. Puerto Rico's next debt payment of $2 billion is due July 1st.
A cybersecurity giant in the making, and that is where we begin tonight's market focus. Symantec will buy privately owned Blue Coat Systems for more than $4.5 billion. Symantec, which makes antivirus software, says the deal will provide better protection for its customers. Blue Coat's CEO will take over the top job at Symantec. That post has been open since April. Shares of Symantec up 5% to $18.21. Walgreens is cutting ties with Theranos. The move comes after U.S. regulators launched an investigation into the blood testing company's lab testing processes. Effective immediately, Walgreens will close all of the Theranos wellness centers at the drugstore locations. Walgreens shares up 2% to $84.36. In an effort to attract a younger generation of workers, McDonald's confirms it will move its headquarters from suburban Chicago right downtown. Reports surfaced about 2 weeks ago that the fast food chain would move to the former studio home of the Oprah Winfrey Show. The move is expected to take place by 2018. Shares of McDonald's up a fraction on the day to $122.99.
Tribune Media and Dish Network have failed to reach a new distribution agreement, resulting in Tribune blacking out stations carried on Dish. Tribune is seeking higher carriage fees, something Dish said is unreasonable, considering the channels in dispute can be watched for free with an antenna. Shares of Tribune down 1% to $36.91. Shares of Dish fell 2% to $52.38. And technology and engineering company Science Applications International posted solid quarterly results, beating both profit and sales expectations. The company cited an extra week in the quarter, additional sales from an acquisition that finalized in 2015, and more frequent share buybacks. Shares finished the day up 2% to $58.56. And Hanesbrands' CEO said that he will step down to take on the role of executive chairman at the clothing company starting in October. The company's current chief operating officer will become the new CEO. The news sent shares down more than 2.5% to $26.14.
At Apple's Worldwide Developers Conference, it was all about the software. The company revealed a new version of its mobile operating system, made changes to Apple Music, and revealed updates to Siri. That's Apple's voice-controlled personal assistant. Apple CEO Tim Cook explained why these updates are necessary.
We believe that technology should lift humanity and should enrich people's lives in all the ways they want to experience it. Whether it's on their wrist, in their living room, on their desk, in the palm of their hand, in the car, or even automating their home.
Shares of Apple fell 1.5% on the day.
Has your smartphone been hacked? According to the experts, the answer is probably yes. And if you own a business, chances are you have no idea that your employees' devices may have also been compromised. Andrea Day explains.
At the end of the day, everything is hackable. What I'm surprised about is that people sometimes forget that it's so easy to hack into these devices.
Have you ever seen this screen pop up on your iPhone when you connect to Wi-Fi? The one that says continue, chances are you clicked it.
Everyone clicks continue. 92% of the people click continue on this screen.
But that simple click could make you a target for hackers.
Someone is trying to gain access to your email, to your password. They're trying to gain access to all of your contacts, who you meet with, where and when. Do you approve? So me, as a security expert, I always click cancel.
Meet Adi Sharabani. He used to work for Israeli intelligence. Now, he's co-founder of a company called SkyCure. They help organizations identify and protect against mobile threats.
We have top pharmaceutical companies, insurance companies, healthcare companies.
But what Sharabani finds most shocking, he says unlike security for desktop devices, most organizations have no clue their smartphones have been hacked, even devices used by top execs. SkyCure runs attack simulations for clients to show them what's at risk.
I still wait for someone to give me a call saying, you know, my IT department actually identified that demonstration of attack that you performed on me. No one knows.
And Sharabani's not alone. Alex McGeorge heads threat research for the cybersecurity firm Immunity.
You've got a device that you take everywhere with you, that you do everything with, and that can be talked to or receive data from almost anyone on the planet. So it's very difficult to secure mobile against, modern, sophisticated attackers.
Despite the challenges, the Wireless Association, CTIA, tells us, quote, the entire wireless ecosystem is working together and individually to vigilantly protect consumers. According to Sharabani, there are three main ways hackers can remotely invade your device. One, an attack carried out through unsecure Wi-Fi networks.
Immediately as they click continue, their password has been shared with someone on that internet.
The second way hackers can attack, through operating system flaws or bugs.
We see that the average ratio is that more than one vulnerability being publicly disclosed every day. And 10% of those are critical vulnerabilities that allow someone remotely to gain access to your device and control it.
The third attack is through bad or malicious apps, especially apps that are pushed or sent directly to you.
Read those messages that are being prompted to us that sometimes say, this app will have access to your email. Would you agree?
That answer should be no. And think about this. Sharabani says there's no such thing as being 100% secure. But there are many ways to reduce that risk. Make sure you update your device as soon as upgrades are released. And think twice before you connect to that free Wi-Fi. I'm Andrea Day for Nightly Business Report.
Coming up, the company that's making a big investment in what it hopes will power the auto industry's future.
Here's a look at what to watch for tomorrow. The Federal Reserve begins its two-day meeting, which will be followed by a news conference on Wednesday. Retail sales for May will give investors a look at the state of the consumer. E3, the video game industry's annual trade show, starts tomorrow, and that is what to watch for on Tuesday.
The two biggest daily fantasy sports companies are reportedly in talks to merge. As first reported by Bloomberg, DraftKings and FanDuel have been trying to combine for some time. Both face the same legal challenges that threaten their businesses. Comcast, the parent company of CNBC, which produces this program, is an investor in FanDuel.
Well, believe it or not, the total number of airline complaints fell in April. The Department of Transportation received more than 1,100 complaints from customers, but that's down 20% from a year ago. According to the Air Travel Consumer Report Card, more flights arrived on time, and the number of canceled flights remained about the same.
From planes to cars, electric and autonomous cars are expected to shape the auto industry's future. And there's one company that wants to be at the center of it all. Phil LeBeau reports from Glendale, Wisconsin.
While the growth in electric vehicles and lithium-ion batteries is receiving plenty of attention from investors, the folks here at Johnson Controls just outside Milwaukee believe the traditional lead-acid battery still has plenty of growth. In fact, the company is doubling its capacity of its next-generation start-stop batteries here in the United States. These batteries, which turn off when a car is idling, are 5% more efficient than traditional batteries and part of JCI's push to improve the overall performance of vehicles with smart diagnostics. Right now, about 10% of the vehicles sold in the U.S. have start-stop batteries, but the CEO believes that demand will increase in the coming years as the auto industry focuses on fuel efficiency and greater performance.
Trying to find a car in Europe that's not start-stop, you're not going to, and 5 years from now, be very difficult in the United States or China, anywhere else to find a car that's not start-stop.
Johnson Controls recently announced plans to build a fourth battery plant in China, the world's largest auto market, All of this as it spins off its slower-growing automotive interiors and seat divisions to Tyco. While shares of JCI have moved higher in recent weeks, this stock, like so many other automotive supplier stocks, has largely been ignored by investors over the last couple of years, mainly because they're skeptical it will generate significant returns in the years to come. Phil LeBeau, Nightly Business Report, Glendale, Wisconsin.
And finally tonight, the landmark musical about the founding father, Alexander Hamilton, was the big winner at last night's Tony Awards. Hamilton took home 11 awards, including Best Musical. But that number fell just short of the record for a musical when the producers won 12. And as we've been reporting, Broadway is coming off a record season, raking in more than $1 billion in revenue. And Hamilton is a big part of that, right?
And you know I am obsessed with it.
You are obsessed with it. You should have
it.
read that story. I hear it's fantastic. I can't wait to see it. That does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we'll see you back here tomorrow night.